This is our Forex blog for January 18th, 2013, and this is showing our new synthetic indexes. In addition to statistically comparing every currency to every other one and showing how strong or weak it is at that time, we also plot a composite index of all of the individual pairs. So in other words, the dollar, you can see, is kind of in a choppy sideways range, breaks out right here around 330. Trends up, goes sideways for a few more hours, breaks out to the upside. You can clearly see it's in an uptrend. You can also spot things as double tops, bottoms, and also trend lines. Underneath here, you can see the CAD, and you can very clearly see a downtrend. You can also very clearly, at this point right here, see a 1, 2, 3 reversal. It rallies up, pulls back down, does not have that much weakness. On the way back up, it doesn't have that much strength. You can clearly see it's not able to go back up to the previous high up here, which is right there. And when it starts to go back down again, you know that it's in a downtrend. It's likely to go back to these lows or make lower lows. And you can also use these to draw fibs on the actual index to get an idea of when a particular individual currency is about to run out of steam. Notice how it goes right to the 1.618 fib. This is an actual index that I created. It doesn't exist anywhere else in the world. And it's kind of proof that what I've always believed in my life, and that fibs work, not necessarily because everyone in the country or the biggest traders in the world use them, but just because they're magical, levels that the market tends to go to before it runs out of exhaustion. In other words, there's nobody left to sell this. There's no more sellers, and it has no place to go but up. I've always tended to believe that, especially with the fib targets, as you saw there. Conservative traders, when they see a downtrend like this, might just wait for the lows to get broken and then go short. And with our old tools, you wouldn't necessarily know when the lows got broken, and that this at 9:30 was a pretty decent place to be selling. Notice that 9:30 also, the dollar's at its highs, it's going sideways here, breaks out. Very high probability trade. You want to buy the dollar versus the weak CAD. We'll bring up a dollar CAD chart, and you can see that you're in one of the strongest currencies versus one of the weakest currencies. And when it breaks out right here, you can see it goes up 10, 20, 30, 35 pips. On the flip side of that, you can also see the pound. This was yesterday's lowest low. Notice where it rallies up to today, earlier in the day, and really can't get over this level. You wouldn't necessarily know that this is a pretty decent place to sell it. It's in a downtrend. The weekly and monthly trend are down. You can clearly see this is a great place to sell because it tried to make a higher high and failed, came back down. But if you were watching the real-time tools at the time, based on our older methods, you would have thought, well, I'm going to wait for a pullback and buy this. But the longer-term trend's down. It hit a major resistance area and failed to break out higher. It's a pretty decent place to be looking for sells. Now, one of the stronger ones was the dollar. It's just kind of going sideways, but a little bit after 3, this breaks out to the upside. So you want to sell the pound dollar, and I would be looking for sells at 3, but a little bit after 3, when the dollar explodes up, would be even a higher probability time for somebody who's a little bit more risk averse. Or you can go to a 5 pips per bar range chart. All right, you can see that this is finally loaded, and we'll go back to that particular time. Notice on the range chart you have a breakout to new highs, and then a wick at the high. A lot of times the wicks at the high tend to lead to down moves. Wicks at the lows lead to up moves. You can see it here, 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 here it goes down, here it goes up, here it goes down. And it really have to be deeper wicks where at least half the bar's a wick to really be effective. It's not always 100% accurate. As you can see here, this wick here did not lead to a counter trend move, but most of the time they do, especially when you're in the longer term direction. So if on a range chart you would have sold this when it went below the low here, put your stop right above the high, you're risking 5-6 pips, and you got into this at the perfect opportunity. And you saw that with the pound, with the false breakout right there. Even though it's extremely strong, this is a very high probability reversal pattern. And guess what? The market trended down. And you can use this throughout the day. You can see this is trending down with a lot of weakness. You get a little bit of a pullback. I've found that 0.1 to 0.15 and even 0.2 levels on their indexes are decent pullbacks. So this is a point, maybe 1.2, 1.3, decent enough pullback here at 330 to be looking for another sell in the pound dollar coming up to 4 o'clock. And you can see on the 4 o'clock one right here, you got a 2-bar pullback. On a range chart, I always prefer 3 to 4 bar pullbacks, like this one right here, 1, 2, 3, 4, 4-bar pullback with a wick, very high probability. But nonetheless, you might have gotten short there, and if you had your stop over that swing high, you never would have got stopped out and then continued. But basically, this is not out yet. It probably will be sometime next week. It looks like I'm making good progress on this. You can use this to trade and very quickly see which ones are the strongest currencies and which ones are the weakest. For instance, here's the New Zealand for today, and obviously this sold off. It was strong yesterday, sold off, rallied up, came back down, made a double bottom, which is always a good sign of a reversal. The weekly and monthly trend is up. This one rallied up and was in a very tight little range and broke out to the upside at 8 o'clock right here. Very high probability trade. Anytime you have a multi-hour rectangle pattern in a very tight range, the majority of the time it spent its time in the 101.3 to 101.4 area, with the exception of a few short amount of time, short minutes underneath it. Very high probability trade. And one of the weaker ones was the CAD. At 8 o'clock, you can see the CAD had made a pull back up. The trend was clearly down. This was really the second decent pullback all day in this one. And you could have bought the strong New Zealand versus the weak CAD at that time, right at the 8 o'clock breakout. Let me bring up this chart over here. Put New Zealand CAD on here. And remember, that was right at 8 o'clock when the New Zealand broke out. And you also have a nice uptrend on this, on the individual pattern. It's got a nice little wedge pattern right here. And guess what? You know, it shot up about 15 pips, pullback, you buy the pullback and went up, buy the pullback and went up. You know, we're talking about high probability trades here. Let's take a look at the euro, because everybody loves that one. This one, you know, clearly yesterday was very strong, and our index showed that. You would have bought that pullback right here and done very well as it continued up. It's always good to know where the previous day's high is, pretty much right here. And when the euro broke back down into this range, and again right here, not a bad place to look for sells, because its uptrend appears to be over. It lost its extreme strength. It wasn't above yesterday's high anymore. At 8 o'clock, remember, the dollar is breaking out to the upside. So even though the euro and the dollar are both in uptrends at various times today, when the euro showed that pattern and the dollar was breaking out, euro dollar makes a really high probability sell at 8 o'clock. And you can see it pulled back. It looks like it made a 50% pullback. And, you know, the double top right there is a pretty high probability in itself. And then when it broke the lows, based on that other individual euro and individual dollar chart, you clearly wanted to sell that, and it went right down to the fib target. And as you're watching, the dollar just keeps going up, up, up. The euro went down, 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 and very quickly, in about 10 minutes, it fell over 50 pips. So that's how you can use this to spot actual patterns. And, you know, again, getting back to the New Zealand, it broke out of this nice little range, pulled back. This resistance area now becomes support. Buying this at the 101.40 area as it starts to go back up was a very high probability. Also, you could have traded the New Zealand against the euro as well. The euro was coming down as the New Zealand was getting strong, so you want to sell the euro New Zealand. And as you can see, this broke down and it fell 10, 20, 30, 40, 50, 60, 70, 80 pips very fast. And again, even if you got into this a little bit late, let's say it broke out and somewhere in this 5-minute bar right here you got short all the way down here, let's say at 59.60, well, you still made 10, 20, 30, 40 pips, even though you got into it late. And that's the power of this. I think it's very high probability. Here's the Australian for another example of it. Notice the weekly and monthly trend are up. It kind of has a double bottom right here. Pretty decent place to be looking for buys in the Australian here at 5 o'clock. And also this one also broke out at 8 o'clock right here. So you could have traded that also against the week Euro at the time. Euro Australian, 8 o'clock. Notice the drop. The pound, I believe, was also weak. So pound Australian also a drop. And notice the drop, pullback, drop, pullback, drop. Seeing the actual indexes allows you to take trades that you really couldn't in many other aspects. Notice a little bit later here the 10 low after 10, the pound, daily, weekly, monthly, one of the weakest currencies, breaks the lows here at 10 o'clock. Look at the pound Australian. Here's 10 o'clock. It had just made a pullback up. This currency, the pound against the Australian, was getting stronger, but the other pound pairs were weak. And so you got short when you saw the pound drop and just collapsed 10, 20, 30, 40, 50 pips. I don't think any tool we've ever come up with is as predictive as this, because it actually allows you to draw trend lines, see chart patterns, see double tops, double bottoms, and all other kinds of reversal patterns. 1, 2, 3 reversals. Allows you to see fib levels, fib targets, everything, because it's actually a synthetic chart that I've created based on the prices and the advanced mathematical formula I came up with for all the different currencies.